thanks for joining me here at my market report. My name is Mike. This report covers the different aspects of what's affecting mortgage rates on a daily basis. We kind of cover into what's going on with mortgage rates, what like data report, like economic reports. We go into the charts of the mortgage-backed securities and yields, as well as the headline news that might be an impact for that particular day. We do cover a little bit of the stocks because they do sometimes correlate, however, not always. We kind of get into, we don't go into specific rates in this report, primarily because there's so many different loan programs and different variables that affect rates that there's other websites for that. This just kind of gives you a general direction as to rates are doing better today than yesterday or not so, or worse than yesterday. So hopefully you can understand the point of these. And a little bit about myself as I'm a loan officer. I do work with the national lender. So if you guys got questions about mortgage rates or mortgage programs out there, or if you're looking to get refinance or looking to pre-approval and purchase your next property, please feel free to reach out. I'm here to help. So without further ado, let's kind of begin the report. We'll start off the economic report. We'll start off the ADP National Employment Report. This is our first look at employment data this week for the month of March, and this is basically the private payrolls. So in February, we initially had 117,000 people, new jobs created. That was revised higher to 176,000. Forecasts were calling for about 550,000 for this report, and it came in at 517. So pretty much in line there. And then it's even going to be better because we had a pretty good revision here by almost 70,000, or I'm sorry, almost 60,000 by basically 59,000. We also got Chicago PMI. This is an index that gauges the manufacturing in the Chicago region. We have been seeing this heat up quite a bit, so as you can see here, it has. Anything above 50 is considered expansion. So in the previous report back in February, it was at 59.5. Forecast were calling for 60.7, and it blew that out of the water, going up to 66.3. So again, these are two very good numbers that we were seeing here. However, we got the other one that's not looking so rosy, and that is the pending home sales for the month of February. So in January, initially it was a drop of 2.8%. However, that was improved a little bit by a drop of 2.4%. Forecast was calling for that same trend at another drop of 2.6, and it came in much worse at a drop of 10.6% from the previous month. Now, a lot of this has to do with, and there's a lot of demand out there. It's just a lot of it's due to inventory. We're at record lows in terms of inventory. On a national level, we got basically 2 months worth of supply. There's some areas like where I live where 10 days of market is about it. We're getting, there's places we're seeing 175,000 over asking price. We're having a record number of people overbidding on properties and bringing the property values up even much higher here. So again, there's a lot of demand, just not enough supply to meet that demand. So let's jump ahead, take a look at the headline news for the day. Stocks are up today. And later today, after stocks are closed, the markets are closed, Biden will be set to announce his infrastructure package that have been people waiting. For the most part, a lot of this has been priced into the markets. We're not seeing any huge fluctuations in this, and some of the information has leaked out. So investors already are aware of this. We're seeing this pretty much kind of in the yields as well as the stock market that they've kind of, along with the stimulus package, we've kind of priced that there'll be more packages coming ahead, these multi-trillion-dollar packages. So for the most part, the markets are kind of already prepared for this. Now, if anything comes out of the ordinary, of course, that would be different. And to pay for this package, they're talking about increasing corporate taxes from 21%, which is pretty low, but up to more moderate to 28%. And then, of course, they're looking at other avenues to try, for taxation as well. So be prepared. Hold on to your wallets. Let's jump ahead. See what mortgage rates are doing right now, and they're improving a little bit. Like yesterday, we started lower here, then came back up. We pretty much came in at, I believe I think just down a little bit, not by much. And then today we did start off a little bit lower, but right now we're up about 8 basis points. So lenders are going to come in with a little bit, maybe a little bit better pricing if they didn't do any reprice for the better heater combined with the two, or they may be just on if they did have a little bit better pricing or about the same, they're going to basically come in at. Again, this is going to be depending on the investor because sometimes East Coast people will come in they'll see this rate way down here, and they'll come in with worse pricing, then maybe do a price improvement. However, those on the West Coast may have seen the pricing closer to here and may not, and did it unchanged. So this is why I'm kind of saying it depends on the lender here. So again, today it came down, but it has risen upwards. So for the most part, we should be seeing at least unchanged levels here, or maybe slightly better, depending on the lender here. But for the most part, lenders in general are pretty close to the same type of pricing as they package these on Wall Street and sell. Let's jump ahead, take a look at yields, and yields are down a little bit too. We had a pretty big test here. This is giving us a bit of a scare. It is subsided quite a bit, down to about the 1.70 range. We did start slightly higher, about the 1.73 range. Now we're down to about just under 1.72 right now on the yields. All right, folks, thanks so much for watching. I hope you guys have a great rest of the day. Again, if you guys got questions or have anything to ask, we can help you and we can be of any assistance. Please feel free to reach out. You guys, otherwise, we'll see you in tomorrow's video. Bye-bye.